All right, and welcome back to the channel. So basically what we're gonna do is we're gonna go over Bitcoin, Ethereum, and EGLD just like we usually do. I might throw in a few others today because of the fact that we're having a big correction starting this morning, and we're actually gonna go back a few hours in the hourly chart and see when did the correction start, and we're going to take a look at what we can expect, because some of this it's very interesting what's already happened. So why don't we just go ahead and kick it off with Bitcoin? Okay, so I'm going to switch over to the hourly chart for Bitcoin. And if we look at the hourly chart, it's very interesting what happened. You can see once we were at around 58,000, we had a slow, steady decline, and we came all the way down here to the 200 exponential moving average on the hourly, and we fell below it. But we came back all in 1 hour. So this was about an hour ago, 2 hours ago, because this next hourly candle is almost closed. But you'll see what happened is that we went down all the way down to this yellow line. And if you've been following the channel for a while, you're starting to see why it's important to monitor trends over a long period of time. Okay, I'm going to go back to the 4 hour just to show this to you a little clearly, and we're going to get rid of the TD sequential. But if you take a look here, I want you to not focus on the moving averages, but focus on the trend lines in the background. Okay, now if you look at these trend lines in the background, it's very interesting, right? We've been following these for a long time. I started up these trend lines probably back in December is where we started with the yellow lines. We were monitoring an ascending wedge. And then as we started to get to the $38,000 to $40,000 range, we got all the rest of our lines because we started seeing clear resistance, clear downtrends, and now you'll see how accurate they've been. I told you before that there's always the potential of Bitcoin going up above the green line and then coming back down to test the yellow line. I also said that if we get support on the green line, that might not happen. So we didn't get support on the green line, at least not yet. But we fell straight through it and we touched almost exactly on the yellow line. So this was a very key line and it held up the entire way. I have not changed these lines in months. So the fact that they are holding up this accurately gives me even more confidence that they're going to hold up even as we go further. The only interesting thing is that the further we go, the wider the lines get. That means that if we jump up all the way to 76,000, there's the potential, like if we come all the way up to this area here on the right of my mouse, so if we come here, all right, let's say at some point in the next couple of months, we're trading at 76,000, there's the potential for us to go all the way back to 60, kind of like we've seen here. So you could end up seeing whatever trading you see here, but when you hit this part, you could come back down, fall below this line, and test the yellow again. So keeping an eye on these lines is really important, and you should be doing something like this yourself if you're doing TradingView. You should be identifying support and resistance channels and following those, because they're going to give you a lot of information for the future. Okay, so let's go ahead and get back. Enough about trying to teach you about charts. I'll teach you stuff as we go. But the interesting thing that I wanted to call out here with the hourly chart is the fact that everything was bought up very quickly. We saw a big drop, right? And then we saw it bought up. And if you look at the candles, like if you look at the volume candles down below, this red candle, so as this was dropping, this was a red candle. But it turned into a green candle. That means that there was more buy volume in that hour than there was sell volume. So more people were buying on the way up than they were as it went down. That means you had a lot of people waiting to buy Bitcoin sitting at around 47 to 50,000. As soon as these levels hit, the price shot back up. Now the price is sitting at around 54,000. Now, granted, that's not a guarantee that it's not going to go back down, right? You could see more consolidation with Bitcoin down back to around 50,000, maybe even down to 48, and then it could move back up. But the way that it was bought up that quickly, and the fact that this current hourly candle is about to close almost in the green, tells me that, you know, this might have been miners selling off. You might have had miners taking profits at around the 54, 55K level, and now you're having buyers that have been waiting to buy coming in and scooping all that up. And that's a lot of Bitcoin to, you know, trade in 1 hour, over 10,000 Bitcoin in 1 hour. So we're talking about an enormous amount of money. Now, the fact that this got bought up so quickly is very indicative of the strength of Bitcoin. So it makes me more hopeful that we're going to see further upside. Otherwise, I would have expected a much bigger drop. And we really need to see what's going to happen in the next few hours with Bitcoin, because it affects everything else. So if you're not buying Bitcoin, you're just buying other coins, you're investing in other assets, it doesn't matter. You still need to follow Bitcoin because what's happening with Bitcoin is going to affect the rest of the market. So you have to make sure you're following it. That's why I go over it every single time in my videos, because without knowing what's happening with Bitcoin, you don't have all the information you need to identify what's happening with other coins. So the first thing that I see that's very, very indicative of strength here is the fact that you have a lot of buying coming back to Bitcoin after this drop. And this was in a very short time period. So we really have to see what happens throughout the rest of the day. Are we going to get more people coming in and seeing that, hey, Bitcoin was 58,000 yesterday, it's 53,000 today, I should buy some, I should buy some because it's down a bit. And if that's the mentality that people take, you could see a lot more buying in Bitcoin, but that also means you could see more red in the other coins, because now a lot of coins aside from Bitcoin are also down 10, 15%. Some of them went down up to 20%, but they recovered very quickly. They saw the same thing, a lot of buy-in coming as this went up. Now, you could have two things happening, right? You could have people taking funds from other assets and putting them into Bitcoin, which is bleeding a little bit of the other assets a bit more. I mean, if you look at Aave is sitting at around, what's the price here? At around 396, and just yesterday it was trading at 437, and not very long ago Aave was trading all the way up to 575. It's put in massive volume here, but Aave is now sitting at a crucial point because there's not much support below Aave from 396 all the way to 300. So this could be potentially a disaster for some people if it drops, but other people might see this as an opportunity. If more people are selling Aave, putting it into Bitcoin, then you might see Aave have a massive spike up again when it hits the 325 level. So the point of me showing you this is to show you that a lot of these coins that are bleeding, they could recover very quickly, because if that money's going into Bitcoin, it might stay there up until Bitcoin goes up again to a certain point. And Bitcoin has a lot more investors than a lot of other coins. You know, there's not too many big companies and institutions coming into the altcoin space yet. It's likely going to happen at some point in the future, but it hasn't happened yet in mass. Like, not the amount of money that they're putting into Bitcoin. It doesn't compare to what they're putting into other things. Okay, so let's go ahead and go back to Bitcoin and see if there's anything else we need to look at. So one of the things that's looking really good on Bitcoin, especially on the hourly, we're going to check the other time frames, is the RSI. RSI is the relative strength index. I've explained it to you before. Basically, you want the RSI to sit between around 40 and 50. When it's sitting in that level, it's a good indication that the asset's holding strength and has a lot of time to move up. And if it ever drops below the 30 line, you want to see it get bought up pretty quickly. You don't want it to hover below the 30 line for too long. We went below the 30 line on the hourly and we came back up pretty fast. Let's switch over to the 4 hour and see how the RSI looks there. Okay, so on the 4 hour, the RSI is looking really, really good. Before this drop happened, before we started consolidating yesterday, the RSI on the 4 hour was sitting for quite a while at the 60 level and above. It had gone all the way up to the 80 level. Now with this drop, the drop was significant enough to take us all the way back down right to the 43 level. That's really good. So you want to see that RSI on Bitcoin continue to stay in this 40 to 50 level. It's better than seeing it go back up very quickly, because if it stays in this level, the price can very slowly move up and keep having these incremental up and downs and keep the RSI low. So when you do have a big pump, if it stays like, so if the RSI stays where it is now and makes it back up to 55, 56, and even if it goes up to the 55 level, that is still meaning that when Bitcoin has its next big pump, the RSI can go all the way up to 70 or 80 while the price goes anywhere from 65 to 70,000. You can have a lot more price movement without being overbought on your RSI. So this was a great drop as far as fundamentals, especially for Bitcoin to keep moving. The question is the drop over? We don't know yet. There's not enough information. At this point in time, we need to watch what's going to happen in the next few hours, and not even just the next few hours. We really need to see what's going to happen in the next 24 hours. So in the next 24 hours, if we see Bitcoin start making a slow rise up, and it goes up and goes above this green line and gets support here, that's really ideal. That's what we want to see. If you see Bitcoin instead start slowly coming back down, the next thing is you definitely want to see it get support at around 47,800. You want it to have support at this yellow line, because this yellow line is really key for it to hold for a number of reasons, and one of them being at this yellow line right now, we have massive, massive support. So we do not want to break this support. Instead, what we want to do is we want to come down and just build more support in this area, right? That's kind of what we've done as we've gone through different stages, and seeing that happen again is really important. So we'll move on from Bitcoin. I think that's pretty much enough for Bitcoin. We can take a very quick look at the TD sequential. The TD sequential is not really doing too much on the 4 hour. It's possible that if it keeps moving down, we could see a 9 flash on the 4 hour in, the next 16 hours or so. So sometime in the next 24 hours. So we'll keep an eye on it. We do on the hourly already have a 9 flash. So the 9 is flashing right now, the red 9 on the hourly chart. But as you can see, the 9 flash is not as important on the hourly. We had one yesterday, and that led to a very minor spike up, and then we consolidated. So we could see something similar here, right? We have a 9 flash. The price could go up to the green line to around 55,000, and then it could dip again. So 9 flash on the hourly, not as important. It just shows you that right now it's in a position where we should see a little bit of upside, but we don't know what that's really going to be. The 4 hour and daily are really where the TD sequential starts giving us great information. And you'll see that on the daily chart for Bitcoin, we actually have a green 7 right now. So seeing Bitcoin go down to about 52,000 and closing the day there would be really good, because then that would reset this. If we keep going up, Bitcoin's going to end up having a green 9 flash at some point in the near future, and that's basically going to put a sell signal. But then again, Bitcoin has been so bullish that it's happened once before, just not even long ago. We saw a green 9 flash, and look what happened to the price. It kept moving up, it got really overextended, but then a small drop here reset the TD sequential, because it was so bullish that it didn't even need to drop below the initial lines to reset. So the TD sequential is unique. It doesn't always need to keep dropping to reset. It can go sideways and then have significant enough of a drop in a smaller amount to reset the TD sequential. So right now, we're just keeping an eye on the daily for Bitcoin too. We want to see what happens over the next 3 days to see, are we going to have another green 9 flash? Because if we do, then we could be looking for a target all the way back down to 40,000, and that could be a much more significant correction. If that happens with Bitcoin, you can expect the altcoins to all start bleeding too. If Bitcoin starts dropping that much, it's very likely that you're going to see a sell-off, and it'll be the next consolidation, kind of like we saw back when Bitcoin hit 40,000 and it consolidated. So we got to keep an eye on it. That may not happen, but it's a possibility, so you should be aware of it. Okay, let's move on to Ethereum next. And to everyone that's sitting in my Twitch chat, welcome. Thank you for joining. I will be getting to you guys very soon after we finish wrapping up Ethereum and EGLD. We'll start our Q&A on the chat. And if you're watching on YouTube, make sure you go check out the Twitch channel, and you can watch the past broadcast to watch our Q&A after we're wrapped up for today. Okay, so let's go ahead and move on to Ethereum. So with Ethereum, this is also a case where if you've been following the channel, you shouldn't have been shocked by what happened to Ethereum. We've talked about this, and it's almost exactly what we talked about. The drop down, the wick, was a lot steeper than we were expecting. I mean, look at Ethereum on, well, let's not look at the daily, let's look at the 4 hour. But if you look at Ethereum on the 4 hour, it went all the way back down to 1,500. Okay, that is a massive drop for Ethereum. Ethereum took, in totality, from, let's just say from about here, let's do it from the start of the day. So Ethereum started the day at around this line, at this trend line, and it dropped an additional 20%. Now, if we look at the 2,000 level, and we look at the drop from there, so the 2,000 level is like the top of this Fib retracement, and we look at that drop, that is a 25% drop that Ethereum took before it started coming back up. I mean, now it's sitting back up at around 1740, but that is a huge drop for Ethereum. Now let's take a look at why this happened. All right, so first thing I'm gonna do is I'm gonna turn off this Fib retracement for now, so we can see things a little bit clearer just on the chart. We'll also turn on the EMAs, and we'll turn this off. So you'll see in this scenario, if we're looking at the exponential moving averages on the 4 hour, it's quite clear what happened, right? We went up above the blue, which is the 20 exponential moving average. We came back and tested the blue. We fell below it. We hit the orange, which is our 50 exponential moving average. We came back and we tested with this 4-hour candle, we tested the 100 exponential moving average. We fell through that, and then we fell all the way below the 200 exponential moving averages. We went through all of them. And now what's happened is we're sitting in between the 100 and 200. That's where the price is now. And we really want to see now, are we going to continue to get support at the 1615 level if Ethereum drops again? Now, Ethereum is a little bit more of a risky asset, and I've been saying this for quite some time. Long term, I'm expecting Ethereum to do very well, but what's key for Ethereum is that they have to fix the gas fees. Nobody's going to use Ethereum when it's so expensive. So if anything right now, Ethereum is more like a trust-based speculative asset because you can't necessarily use the blockchain. Like you can only really use the Ethereum blockchain for very large transactions where it makes sense to pay a heavy gas fee, right? If you're doing small transactions, it doesn't make sense to do it on Ethereum. That's why Binance Coin's been doing so well. So pretty much seeing a drop like this for Ethereum is not out of the question, especially after we hit the high of 2000. You're seeing people sell off and it consolidate. Now, on the 4-hour chart, the one thing that Ethereum does really have going for it is that it's starting to enter the oversold territory on the 4-hour chart, which means that at a certain point in time, we should see Ethereum pick up. But there's a good possibility that the rise for Ethereum might be a bit slower. It might be something like this. And you could see it take a few weeks to get back to 2000. That's a possibility. Unless you have big investors that are planning to invest a lot of money in Ethereum for the long term, then these levels right now are looking very lucrative. And that would also explain why it went up from 1500 all the way back up to 1700 so quickly. Like Bitcoin, it was bought up very fast. But unlike Bitcoin, it's not holding as well at the current support level. It needs to move up past around 1800 and really start sitting on this line here, which is the 100 exponential moving average. Bare minimum, it needs to get support here. So what I would like to see to show strength in Ethereum is for Ethereum to come up and start trading at this line here. And that would essentially be where this exponential moving average is. So we want to see that. We're going to look at it in the short term and see what happens. We'll go ahead and turn on our Fib retracement again. And we're going to take a look at this Fib retracement without the EMAs. So now looking at the Fib retracement, we talked about this, I think, in our last video. We basically said once we hit 2000, we need to see one of two things. We need to see either we go above 2000 and we flip 2000 as support. If we don't see that, I told you at the time, it's a very good possibility that Ethereum will drop back down to this red line to about the 1830 level and it will trade there. If it holds that support, there's a good chance that it would trade on this trend line. And we kind of saw that up until this morning, right? And then after that, we had an even bigger sell-off and we got support at this line here, this green line, which was 1723. We hit it during this hour, but then we fell through it and we came right back and now we're getting support at that line. So the lines are holding up pretty well for targets, but like I've taught you with EGLD, you sometimes, if you're planning on getting into these assets, even if you're expecting the price to go to a certain amount, you want to put your buy orders much lower, just in case. Just in case. They may never hit, but they might. So you're hedging your bets. And this isn't financial advice. I'm not telling you to buy anything. I'm not telling you to sell anything. I'm just telling you strategically that when you are buying and selling, it's better to try to buy lower if you can. There's certain assets, though, that you may not really care where you buy. I mean, especially with me when it comes to Bitcoin. If I'm usually with Bitcoin, I'll dollar cost average. I'll put in tiny amounts and just, let it keep putting in small amounts over time. And that way I end up with, a tiny amount of Bitcoin that I'm happy with, and I can just keep that long term. So with Bitcoin, like anywhere I've bought in the past, even though they're tiny amounts, I've never gotten rid of it. I've just held it. And that's the smart thing to do for Bitcoin, in my opinion, because right now Bitcoin is so bullish that even if it takes a 30% drop, that's just another opportunity to dollar cost average. If you've bought higher, it's probably not in your best interest to sell and take a loss. You could just hold on to that amount and then you can keep adding to it. So that's my strategy for Bitcoin because I don't plan on selling it. I think out of everything, it's the biggest dog in the race. And then on top of that, it has the biggest amount of institutional money coming in. And the supply is so fixed that as the demand increases, there's just not enough coins. So I don't want to ever be caught on the wrong side of that. So I prefer to dollar cost average there. And you need to figure out, is that kind of strategy good for you? but keeping some orders at 47,000 for Bitcoin or 46,000 for Bitcoin would have been a very smart idea for someone. If someone had done that yesterday or the day before and just left some tiny orders there, they would have triggered today, and you would have already, let's say whoever did that, whoever bought Bitcoin when it dipped down to around 47,000, they've already made 13%. So it's a good strategy to do that just in case there's a drop. But then you do run the risk of missing out if it keeps moving up, because then your order may never trigger. So it's really a catch-22. You have to decide what's the best strategy for you. Let's go back to ETH. Okay, so with Ethereum, we do see this as a big drop, and this is slightly concerning for me because with Ethereum not solving its gas fee problems yet, I worry that Ethereum could potentially have more downside. Now, long term, I feel like Ethereum would fix their issues, but it's also just a riskier bet. So you really have to figure out what your strategy is with Ethereum, because if you believe in it long term, you're really relying on the fact that A, they're not just going to print more tokens, and B, that Ethereum is going to fix the infrastructure issues that are facing right now to really make it give a higher utility to the buyers. In all general view of this trend right now for Ethereum, we're basically seeing something quite simple. Right, if you look at this Ethereum chart, pretty much what you're seeing is you're seeing a ascending wedge for the most part, if you look at it this way, right? If you look at this, and then if you look at this. Now, the issue with these types of charts, normally a descending wedge is one that is bullish, and an ascending wedge can be one that is bearish. So with an ascending wedge, you may expect to see a drop like this, but we don't know if this is the end of it, right? If this ascending wedge, if we keep trading in this channel, and Ethereum doesn't get its act together as far as fixing its protocol, then you could very well see Ethereum keep trading in this range and then have a bigger drop out of it, and hit this support level here. That's a possibility, but we don't know. This could very easily turn. We just haven't confirmed exactly what's going to happen with Ethereum yet, and we don't really have enough news to know when the gas fees are going to be fixed. So I look at Ethereum to be a little bit more of a risk right now. So I have some Ethereum, but I haven't been dollar cost averaging into it. I've kind of just been holding what I have and leaving it be and deciding, what's my long-term strategy for Ethereum. I haven't figured it out yet, but I need to figure that out. So I'll probably spend some of my time trying to figure out what my strategy is going to be for Ethereum in the long term. All right, so let's move on now to EGLD. All right, with EGLD, we are seeing a couple of things. I'm actually going to pull up my other chart for EGLD. Let's go ahead and do a couple of things here. Let's put our EMAs back, our TD sequential back, and I'm going to save the Bitcoin chart so I can keep an eye on this throughout the day. And here we go. So with EGLD, we're seeing a number of things, okay? There's a couple of things that concern me. There's a couple of things that look really good to me. So let's take a look first at the things that concern me. Okay, so we can turn off the TD sequential. That's kind of irrelevant on the 4 hour. We can also, actually we can leave things like that. Hang on just a second here. I also have a Fib Retracement. So we'll get back to the Fib Retracement in a little bit. But basically what I want to show you right now is this triangle. So we've been moving with this symmetrical triangle for quite a while. Now within this symmetrical triangle, we had a few other patterns, right? We had these descending wedges. So we had this descending wedge, we broke out of it. We had this descending wedge, we had a minor breakout out of it. Now, descending wedges, that's how they work. You normally break out of descending wedges, so it's kind of a good thing to see descending wedges within a larger symmetrical triangle. It's an indicator of bullish movement with the asset. It means that the asset is consolidating slowly and it's being bought up well. And we've seen that time and time again with EGLD. So that's definitely one of the bonuses. That's one of the positive sides with what I'm seeing with EGLD on the chart. So we'll get rid of the descending wedges and focus on the triangle. Now, the concerning thing for me is not even the triangle. The triangle is a good thing, and you can see a breakout or a breakdown out of the triangle. If you're following me on Twitter, you saw yesterday that I said we're forming a symmetrical triangle, but the symmetrical triangles can go either way. They can go up, they can go down, and you need a confirmation. And right now, even this drop is not 100% confirmation. And the reason it's not a confirmation is because we're at right now at the critical point. We've come back up to almost where the base of this is. And two things can happen when you start setting in a base here. We can either consider this to be the base, or we extend the triangle, because if we get a lot of support at this area and then go back into the triangle, then that's technically extending the triangle. So let's see what that would mean. That would mean something like this. We would take this line and we would extend it out to where we're getting the support here. Then we would take this line and we would extend it out based on the peaks, right? So that's actually a little high, because I want to hit at least 2 or 3 of the wicks on the way up to confirm that these are actually resistance areas. So I kind of prefer this line here, and then I would close my triangle there. Now, how does this affect the price? Well, basically what this is telling us is that this triangle is moving longer than we expected, and as long as we hold this line and we keep trading within it and then come back here, the price is still getting constricted. The whole point of a triangle is that you're putting in, like, your highs are dropping. So that's this line coming down. You're putting in lower highs. And then your lows are getting higher. You're putting in higher lows. And you can see, even with the 2 big drops we had, if we draw a straight line here, you know, this line tells you where this current drop was, but previously we actually dropped below it. So in technicality, the current drop down to about 101 is a higher low. So it's a low, but it's higher, and that's always a bullish thing. If you start dropping lower and lower and lower, that's a bearish thing. So the key now is to see, do we hold this triangle with EGLD? And the key is also to see what kind of news comes out for EGLD, because at the same time that all this is happening, the EGLD team is doing their hypergrowth initiative. So as we start getting more information about phase 3 of staking and the different plans that are going on in the short term with hypergrowth, that could bring in more attention to EGLD and bring in more investors. So that could push up the price. But for right now, consolidating, it's not a bad thing, because we're seeing a lot of great things. Number one, the RSI on the 4-hour is looking amazing. The RSI is sitting at 33. And honestly, if it can keep trading in this range, slowly moving up, that's really good for the RSI, because then when we do have a spike, there's a lot of room to move. That's one thing we've talked about numerous times. If we look at the daily chart, you'll see the other thing. Let's put on the TD sequential here. On the daily chart, EGLD was massively overextended. So you'll see we had a 9 flash back here on February the 1st, and then this entire run up to 200 was super overextended. The sell signal was very early before this whole run. Now we've consolidated to a point that not only has it reset for quite some time, but it's also seeming like it's stabilized on the daily. Like if you take a look at the daily chart and we turn everything else off, I mean, and you can see it a little clearer, right? We can keep the VPVR on, but we'll turn off the EMAs, we'll turn off the TD sequential. Take a look at this chart, and basically what you're seeing is almost every single daily candle, wherever the price was, has been bought up. You know, these are all wicks. What you don't want to see on the way down is, I mean, you honestly, on the way down, if you have less wicks than this, but at least some, it's still a good sign. But to see these many wicks on the way down, it's showing me that the price is getting constricted, and what's happening is people are buying in. So the price is staying stable. So to see this kind of stability with an asset after it's made 1,000% run it's very promising. It's a good thing to see. This is the kind of correction that you would see in the earlier days of Bitcoin. You know, not super early days, but in the days of Bitcoin when it first started hitting, you know, the few $100 range. You know, you would see that it would go up a certain amount and then it would come down and correct, but it would have stability there. People would keep buying it. It wouldn't just crash. And then after that stability got realized and people saw that, okay, the asset is losing volatility, as the volatility goes down and more buyers come in, the price goes up, and then you have the same cycle repeat. It goes up to a new high, and then it hits a correction, and it stabilizes again. So the fact that we're seeing that after 1,000% run is very promising, and if we continue that pattern, we can expect this type of movement in the future, right? If we have another big rise up to, you know, $300, $400, $500 for EGLD in the next few months, you can expect that it'll likely go sideways for a while. So it might hit 450 or 500 and then come back down and trade at around 300, 350 for a good month. while it's consolidating and lowering volatility, bringing more people in at those prices, putting in more volume, and then moving back up. Right? If you're living in a world where you're expecting, oh, I bought EGLD last week, I bought GRT last week, and I can't believe it's not up 100% already, then you're living in a fantasy land. That's not how it works, right? That's not a good strategy for investing. That's wishful thinking. That's like going to Vegas and hoping that you're going to get pocket aces in a poker hand every time. It's not how it works. The key is to figure out what you expect it to do long term, and to do risk management when you get in, and to do enough analysis to give yourself ideas of where you may want to buy. And I told you recently in one of my previous videos, I talked about with EGLD putting in buy orders at 130 and 115. 125 and 115. That's where I had my buy orders sitting. They've both triggered. All right, I hit 125 in the last hour, and I hit 100, in the last 4 hours. Or in the last hour, I hit 100, and then in the last 4 hours, I hit 120 or 105. So I thought that maybe it'll drop down to 100, but just in case it doesn't touch 100, I was like, let me put a buy order at 105. It worked out really well because it went down to like 101. So I just triggered that buy order, and it's already up to 128. So that's a decent purchase, right? I got it low. I didn't have time to do it. If I wanted to do that manually, it would have been impossible. I would have had to go online at the perfect time and place the order. But because the order was just sitting there, it triggered. So it works out well for me. I don't place large orders. I place smaller orders over a longer period of time. It's another way for me to dollar cost average. So it reduces my cost basis long term. So that's the right way to do it, in my opinion. That's how I enjoy doing it, and it allows me to use my chart analysis for my benefit. Okay, so let's go back to the Fibonacci and to the consolidation triangle. Now, the only thing that worries me here is that every time we come down to this $100 level, we're getting bought up so fast that we're still not putting enough volume into this range, right? Between 120 and 100. I would really have liked to see us go to 100 and very slowly come up, because then this volume would have come out more. So that worries me a little bit, because that means that seeing drops from 120 down to 105, 110, it's still possible. And that scares a lot of people. So you don't want to see that, but it is a possibility that we could see. So that's slightly worrisome. The other thing that's a little bit of worry right now is that we've put in so much good volume here, but when you go below it and your higher volume support is above you, it turns into resistance. So we could now see a good amount of resistance at this line, the 140 level, because this is where we have so much support. So that support could flip to resistance, which means that if we come back up in this triangle, we could hit resistance here. It fits perfectly because that's where the triangle head is. And then we might come back down and keep getting constricted. In reality, this is not a bad thing because you want to see a big breakout out of this. But like I told you before, these symmetrical triangles can go either way. So we could see another drop after this and then keep moving, at which point the triangle just gets bigger. Right? You get a bigger consolidation triangle. So we have to keep an eye on it and see what happens. But in the short term, we really just need to watch it and see where the price goes in the next 24 hours and how Bitcoin does too, because EGLD seems to be very much related to Bitcoin like a lot of other assets. The one thing that I noticed with EGLD that's kind of interesting is a lot of times when Bitcoin and other assets are in the red, EGLD's in the green. EGLD's doing well. So I'm also very curious to see if today EGLD picks up momentum before a lot of the other coins and we start seeing EGLD go back into the green while other things are in the red. I've noticed that's a pattern over the last couple of months, that EGLD tends to be in the green a lot faster than other assets, which I think is indicative of its strength as well. So we'll take a look at that and we'll see what happens. Okay, let me see. Now, there's only one other thing that is of concern for the short term. And this is probably the biggest concern with EGLD right now from a chart analysis perspective. Okay, so let's take a look at that, and then we'll wrap up with looking at the Bollinger Bands for EGLD. Okay, so the biggest concern that I have right now looking at EGLD is this right here. Okay, we'll turn on the moving averages. Now, our moving averages are pretty easy to understand. How do moving averages work? Well, the moving averages themselves are telling you for a certain level what is the price expected to follow. Like what the price is expected to follow this range at a certain level, and you have a number of different levels. So the first thing that we notice, we'll get rid of the consolidation triangle, and we're also going to get rid of the Fibonacci. Okay, I want to make it very clear for you because this is slightly concerning. Okay, so you'll see here, this is a good sign. You want to see that your moving averages have a good amount of distance between them, and they have a good amount of pushing upwards, right? They're all moving in an upward direction. That's a good sign. That's a good sign for a bull run. And you'll notice that for the long period of time, if we look at this chart, you've had EGLD sitting on top of this 20 exponential moving average, right? It's been kind of coasting on top of it. And then after this run, we started to fall below it. We got support on the orange one, which is the 50 exponential. Then we came down and we tested this one, which is the 100 exponential. And we used the 100 exponential as support for quite a while. Now what we're seeing is, we've already seen it once that we've come down and touched the 200 exponential moving average. And now we've seen that we've come down and touched it again. Now, two concerning things with the moving averages right now are that A, we are sitting in between the 100 and 200. Now, as long as we're sitting in between the 100 and 200, the longer we're there, the more possibility we have to come and trade on the 200, which would put the price down to about 112 at current levels, right? That would mean that if the moving averages continue to move like this, and this would be on a slightly downward trend, then the price could move down and start trading at this 115 to 120 level. So looking at the moving averages, that's a very valid concern for the short term, but that's a concern as far as price. As far as fundamentals and long term, that's not really a bad thing, because then we're putting in even more volume at these levels here, which is a good thing too for the rise up. So there's benefits and then there's negatives to everything. Negative is short term, you could see the price go down to this red line and trade here. Long term, the benefit is that that puts just way more support in this range where we don't have nearly as much as what we do at 140 to 150. So it would have good implications for the future, but it would just not be good for the price in the short term. Then the other concerning thing here, and probably the most concerning thing on the chart right now, is that you have this 20 exponential moving average, the blue one. Okay, so if you see that, the blue one is usually on top, right? That's showing bullish momentum. That is showing that the asset is doing very well in purchasing and it's on a rise. Now, when you see the blue line cross the orange line, so when you see the 20 exponential moving average cross the 50 and the blue line goes under it, that's a neutral signal. Okay, it's neutral as long as it stays above the 100. So as long as you're above the aqua line, if the blue line goes below the orange, it's not that bad. It's neutral. It means that you're in a consolidation. And we've kind of stayed that way for a while. But now what's happening is we're getting very close to the blue line falling below the aqua line. So that's the 20 exponential moving average crossing below the 100 exponential moving average. That's a bearish signal. That shows you that the price could be moving down further. There's no guarantee that that's going to hit, because if the price continues to consolidate and moves up, they may just skate one another, or they could do what we saw here, you know, where it goes below very short term and keeps moving. What you don't want to see is for something like this to happen. This continues to move down. This starts to turn and move this way, and then on a downtrend, while the 20 starts to go like this. That is a bad sign. When you see that happening with the moving averages, then basically you're expecting the price to move in this direction, which if that happens, if it moves in that direction, then this consolidation could go a lot further, and we're looking for the price to possibly go below 100 and stay below 100 for a little while until it consolidates and likely puts in a lot more volume between the 80 to 100 range. Now, granted, you know, on this channel, I'm not always going to, you know that I'm bullish on EGLD for the long term, but I'm not always going to sit here and give you, you know, chocolate and bubbles and tell you that, oh, it's always going to do well. You know, the thing is, when an asset's moving up, it goes through price discovery. This is what EGLD's doing now. This entire level, it's all price discovery, and we're starting to see where the support is, where the resistance is, and sometimes your consolidation takes you back to previous levels, and then you can either trade there for a while and break out of them, or you could just hit them and wick out of them. So far, we've been wicking out of everything. So short term, that's a good sign. but we need to watch these moving averages and we need to see what happens with them over the next week or two. In the next 1 to 2 weeks, if we see something like this, if we see the moving averages come down, kind of touch one another and then move up, so you see something like that, like a small cross and then an upward trend, that's fine. Nothing wrong with that. But like I said, what you don't want to see is you don't want to see this move down while this continues sideways and this continues to move down. That's a bad sign, right? And then if the 20 ever comes down and crosses the 200, that's a very bad sign. So we want to keep an eye on all these moving averages and see what happens with them. And we just want to see how the consolidation runs. And the best case scenario is that while we're in this consolidation, we don't see things like that with the moving averages, because one thing to understand about chart analysis too is I'm not the only one who's doing it. A lot of the people that trade these types of assets on a daily basis, they are doing this type of chart analysis. So if they're doing this type of chart analysis and they see this, that's a sell signal for them. When they see the moving averages converge like that, they are using that as an indication that, okay, I need to sell this because it might keep going down. And if you have a large number of traders that are basically controlling the price on the exchanges by their buying and selling activity, all seeing a bearish signal, then it's a good indication that a lot of those people might sell. It means nothing for the value of the asset, right, long term, because the project determines that. Is it a good project or not? Does it have good fundamentals? So that's what's going to determine how many people use it, what the transaction counts are going to be, what the fees are going to be, how valuable it's going to be, what is it going to be in 6 months. But short-term price action, a lot of it can be dependent on what you're seeing on the chart, because just the people that are trading are using the same type of analysis to make their trades. So if they see this, then there is a good chance that they could get scared and sell a bunch of EGLD on the exchanges, and that drops the price. But that's no indication that people staking are going to unstake and start selling. You'll probably see that the staking numbers will stay the same, because most of the people staking are in it for the long term. So keep it in mind. You have the bearish outlook, you have the bullish outlook. Personally, I think long-term EGLD is going to do very well. None of this scares me into selling. I'm going to hold it. Even if it drops down to 50, I'm going to be buying at those levels, and I'm going to just be looking at it as an opportunity. To me, it's like, when Bitcoin was 200, 300, and it went back down to 75. Like, the people who bought there, they did a wise thing. Now, Bitcoin and EGLD are very different, but I believe in the EGLD project. So I think long-term that it's going to be good. Keep in mind, not financial advice. That's my opinion based on what I know about the infrastructure and the project and its potential applications. So I think that it's going to do well. I could be wrong. I hope that it does, and I hope that I'm right about its future prospects. And I'm very curious to see how it works out. All right, that is about it today for all of the technical analysis. I hope you enjoyed it. I hope it gave you some information. Keep an eye on the charts, see how things are doing in the next day or two. We'll try to have another video on YouTube in the next maybe 24 to 48 hours, depending on how the charts are looking. If I can give you good value, I'll make a video. If I can't really give you good value, if not much changes, then there's no point, because everything stays the same at that point. So we'll see. Hopefully in a couple of days, you'll see me again. Make sure you leave any comments if you have any questions, and make sure you follow me on Twitter and on the Twitch. We're going to get started with our Twitch Q&A chat now. So if you watch this on YouTube and you want to join in on the chat, follow me on Twitter. I'll be announcing when I go live, or just go onto my Twitch channel and you can watch the past broadcast. Fast forward to the end of the video and you'll see all of the Q&A stuff. Thank you for joining me. To the YouTube people, I appreciate you. I'll catch you next time. Peace.